On today's episode, we are going to take a look at Microsoft. They just reported earnings, so we're going to take a look at their earnings report. This episode is going to be broken down into two segments. The first segment, we're just going to do a quick overview of of the major highlights of their earnings. And the second segment's a little more in-depth. We're going to take a look at their earnings report, earnings presentations, and some of their financial documents to really understand what happened with their earnings. So let's get started. And before we go any further, if you are new to my channel, if you are a long-term investor, and if you like learning about growth stocks, make sure to hit the subscribe button. Also, if you guys want to get in contact with me, feel free to post on the YouTube comments. I also have a Twitter, which I'm very active, and there is a Discord channel, which is free to anybody that wants to join. But remember, all of these are my opinions and nothing here should be taken as advice, as I am not a professional. Finally, if you want to sign up to my weekly newsletter, check out josenaharo.com and make sure to subscribe. Alright, so first let's start off with taking a look at the price performance for Microsoft. So Microsoft right now after hours unfortunately is down about 2%, even though they did report great earnings. So let me know in the comments, what are some of your main reasons for being in Microsoft? For me, my main reason for being in Microsoft is their future growth in the clouding market. So like I mentioned, after hours is down 6%, but let's take a look at Microsoft in a longer time frame. In the past 6 months, Microsoft has returned about 27% to investors. In the past month, they have returned about 5% to investors. In the past 5 days, they have returned about 3%. But after today's drop, it will probably be closer to a 1% increase. Still, a great returns to anyone who has been investing in Microsoft. So congratulations to all those that are Microsoft shareholders. All right, so now let's take a look at their overview of what happened in this earnings. So they reported earnings for Q4 of 2020. They did GAAP earnings per share of $1.46, which beat expectations by 9 cents. Revenue of $38 billion, that's up 12.8%, so almost 13% year to year, and it beat expectations by 1.4, closer to $1.5 billion. One of the biggest driver here was the intelligent cloud revenue, which it was about $13.4 billion, and this is their clouding market, and this is up 17% year over year, and it beat both expectation and the company guidance. So a lot of people might be like, hey Jose, you're showing me all these crazy results. They beat earnings, they beat revenue, they have increased revenue, and the clouding business is doing amazing. Why did the stock price drop 2% after hours? And the closest thing I can say to why is I do believe the stock market is more of a future value. And what I mean future value is it doesn't really care, the market doesn't really care of what the company is doing now. It's comparing to what it's going to do in the future, and that's what the price value of the stock is truly worth. So even though earnings were good, it might have not been as great as what was expected for this market growth, especially with the clouding market right now booming like crazy. Investors might have expected a lot more. And even though they were good, they were not as good as what they were expected. So that causes the stock price to drop. There are many reasons. Another reason could be that investors are just taking profits right now after like I mentioned, in the past month it's up 4%, and in the past 6 months it's up over close to 30%. So investors could also just be taking some profits at the moment. So now if we take a look a bit more on some other highlights, first revenue breakdown, and like I mentioned, later on in this episode we're going to do a little more in-depth analysis. But Microsoft has 3 main segments that they have, even more smaller segments within that they collect revenue. So the first segment is productivity and business process. The second segment is intelligent clouds. And the third one is more personal computing. So productivity and business process, this is where you have things like any type of software that is used in enterprise, or like Microsoft Office, Office 365, Outlook, Skype. Then they have intelligent cloud. So intelligent cloud is pretty much anything in their clouding business. More personal computing. More personal computing has to do with their Xbox, all their hardware, the Surface. And let's take a look at how they did. So productivity and business process did $11.75 billion. It was expected there to be 11.9, so that did not beat expectations. Clouding did $13.37 billion. And the overall expectation was 13.11, so that beat expectations. And finally, one of the biggest winner was more personal computing, which did 12.9 billion, and expected was closer to 11.5. So that really shot up, and that's pretty impressive. But remember, right now we are in a market where a lot of people are working from home. We have people schooling at home, and we have people just wanting to play games at home. So this has helped that more personal computing, and to me it's actually pretty impressive that it's still going up. In the first quarter we did see a huge purchase of items like this, but now even quarter two is showing strong numbers in personal computing. And they show in the personal computing, the biggest things were the Microsoft Surface revenue was up 30% year over year, and Xbox products were up 68% year over year. They do mention that Azure is Microsoft's clouding platform. Revenue was up 50% year over year. And this is actually it's decelerating compared to the 61% of the last quarter. And a lot of people are talking bearish sentiments toward this, where last quarter one of 2020, quarter three of 2020, looking at Microsoft's fiscal year, they saw 61% increase in Azure. Now they're only seeing 50%. But remember, as you get higher, increase your revenue higher, every time you start increasing it, that percentage, even though you might be increasing it at a higher numerically wise, because your overall total is already up, that percentage tends to go down. A 50% increase year over year is still pretty amazing, if I may say so. And we just have a few more highlights before we take a full in-depth analysis on Microsoft. Microsoft for the upcoming quarter, for the first fiscal quarter, that's going to be about at the end of September, they call about $35.6 billion in revenue. This is implying 8% revenue growth compared to the same time last year. Unfortunately, this forecast is lower than what was expected by analysts. Analysts were expecting closer to 35.9. Microsoft is saying they're only doing 35.6. This could be another reason why that stock price is down. Remember, so much things could be happening, and all these could be reasons for the stock price to be going down. Another thing I want to mention is this most recent quarter, Amazon did have some acquisitions and some closing down. The first thing is they shut down Mixer, which was their video game streaming platforms, and they are teaming up with Facebook to do that. They also did some acquisitions that I was not familiar with. The first acquisition they did this quarter was CyberX. And CyberX is a startup that will help monitor corporate hardware like alarms, cameras, and phones. Again, Microsoft is trying to be that all-in-one enterprise package deal, so I can see why they would acquire this. The other company they did acquire this quarter was Metaswitch, and Metaswitch is a telecommunication business, and they are it seems like they're very strong in the 5G platform. And again, that's something that can help Microsoft with the clouding market. So that's another one that I thought was pretty impressive. And the third acquisition, and for them to do 3 acquisitions in one quarter, again, shows that Microsoft is more on the offensive side right now. They bought a software automation company, Softmotive, and here they mentioned that this can help. And like I mentioned, Softmotive, it's an automation company, but more of a software automation where they use, for example, they do have a platform which allows applications for automating tasks in Windows. So these are all pretty cool markets that Microsoft is trying to grow some stronger presence in. And I think, like I mentioned, it's showing how Microsoft right now is on the offensive and not a defensive. And this is what makes Microsoft easily a $1 trillion company. All right, so now that we took a look at Microsoft's main point, I want to take a look more in depth of their earnings presentation. So here we're gonna do a little more look at the numbers. So like I mentioned, if you guys want to learn more about fundamentals, make sure to stick around. I've done this for many years already, so it gets a lot easier every time I do one. So like I mentioned, Microsoft's had three segments. It had the productivity and business process, it had the intelligent cloud, and it had the more personal computing. Their total revenue increased 13%. The productivity business increased 6%, intelligent cloud increased 17%, and more personal computing increased 14% compared to same time last year. So all of their platforms are doing a lot better and increasing. This is crazy, $1 trillion company increasing revenue at a 13% rate. But then there's also some things that I'm not liking, and we're going to discuss what happened later on in this episode. But the first thing is their gross margins percentage decreased by about 2 points. Their operating income percentage also decreased by 2 points, and their total net income decreased by about 15% compared to the same time last year, which as a result reduces their earnings per share by 15% compared to the same time last year. And it has to do with an increase of expenses that we're going to take a look at later on in this episode. And like I mentioned, there were the 3 products. Let's explain what's inside these 3 products. So first, in the productivity and business process, they have Office commercial products and cloud service revenue, and this was up 5%, mainly driven by Office 365. They also have Office consumer products and cloud service, which was up 6%. Again, continued to grow by Office 365 consumer. They have LinkedIn in this, which revenue increased 10%, and they have dynamic products, which increased by 13% compared to the same time last year. Then they have the intelligent cloud. Here, they just have all types of clouding products. And remember, I mentioned this was up 19%, and the huge driver force was the Azure revenue growth of about close to 47%. Now, if we take a look at more personal computing, here they have their Windows OEM revenue, which was up 7%. They have their Windows commercial products, which is up 9%. They have their Xbox content and service, which is up 65%. They have their Surface revenue, which is up 28%. And they have their search advertising revenue. Remember, Microsoft owns Bing, and they do have some form of advertisement revenue there. They also have revenue for advertisement in their Xbox and all their other software, but that's down 18% compared to the same time last year. Remember, right now we're in a market due to COVID-19. A lot of companies stop advertisement as their first way to like save money. So it is understandable to see that there. And to me, it is pretty impressive to see the Xbox content increase by 65%, especially because right now Xbox is still waiting for the new system to come out later this year. So normally customers are not out there buying too many games because they're waiting for that new product to come out. But I'm guessing more people working from home and staying home has increased the amount of games people are playing, saving that time from the commute. But 65% is a lot, and this to me gives me a bullish sentiment to all my esports companies. So I do believe Activision, EA Games, and TTW are probably gonna report great earnings after seeing this information from here. All right, so now let's take a look at their some more information they gave out this earnings. Let's remember, this is Q4 of 2020. So even though we are comparing it to same time last year, they also showed their total numbers for the full year of 2020. And it seems to be a very strong year for Microsoft. Revenue was up 14% in 2020 compared to 2019. Operating income was up 23% compared to 2019, and net income was up 13% in GAAP earnings compared to the same time last year, compared to 2019. So it was a very strong year for Microsoft, and I do believe it's going to continue to be, the upcoming years are going to be better, especially with that Azure and that clouding business just increasing, and the gaming market as well. All right, so let's take a look at some of their financial documents. The first one is going to be the income statement. And here we already looked at their revenue, so I'm not going to keep talking about their revenue. But one thing I did mention was Microsoft's net income was down pretty big compared to the same time last year. So net income last year was about $13 billion, where net income this year was about $11 billion. So it was down 15%. And we got to understand what's happening here, right? Seeing money like that disappear is definitely not something you should overlook. The first place I wanted to take a look at was in their total cost of revenue. So first, total cost of revenue did increase by about $2 billion compared to same time last year. And we are going to take a look at in a few seconds why there was that increase there. But we can see not only was total cost of revenue up, they did increase their overall research and development. So research and development last year was 4.5 billion, where this quarter was 5.2. Sales and marketing same time last year was 4.9 billion, where now it's 5.4. So they saw about $2 billion increase in cost of revenue and close to $1 billion in research and development and sales marketing added together. Obviously, we're going to see a decrease in net income. But here, if we take a look at their earnings presentation and scroll all the way to the bottom, they explain why these expenses have gone up. So cost of revenue went up $1.9 billion, and this is mainly driven by the growth in commercial cloud and gaming. So that pretty much just tells me that Microsoft right now is just really focused on expanding their growth. And right now they're going to be spending more money to try to acquire more customers. And that to me is a-okay. They mentioned that the research and development expense increased by 700 million. And that was driven by investments in the cloud engineering, in cloud engineering and devices. Again, another cloud. If I'm seeing an increase in expense because they want to continue to develop their products in the clouding market, in the gaming market, I for one am for it, because I do believe this is a market that's going to continue to go up. They mentioned sales and marketing expense increased by close to $500 million, and this is just an increase in bad debt expense and investments in commercial sales. So that doesn't really tell me much. One thing I do know is Microsoft did have a big expense this quarter just because of the shutting down of certain Microsoft stores. So now that we understand what happened in their net income, let's take a look at my favorite document. My favorite document, if you guys have been watching my show, is the balance sheet. I feel like one can learn so much about the balance sheet, about a company by looking at their balance sheet. So first, let's take a look at total cash, and this is comparing June 30th of 2020 to June 30th of 2019. Total cash for this company right now is sitting at about $136 billion of cash compared to 134 same time last year. So an increase is roughly an increase of about $2.7 billion, closer to $3 billion of cash. And that to me is actually pretty impressive. Even though this business bought over 3 companies, acquired 3 companies in this quarter alone, they still have more cash than same time last year. That shows great results for Microsoft. Next, I just want to take a look at their total assets. So remember, total cash and cash equivalents kind of increased by closer to $3 billion. Total assets this quarter were 301 billion compared to 286 billion same time last year. So that's closer to a $14 billion increase. 3 billion comes from the total cash increase, but there is a huge portion that comes from property equipment that increased by about $10 billion. Last year was about 36 billion. This year is about 44 billion. So let's try to understand where this property and equipment comes from. One, they did mention that they are investing more money in clouding products. Again, an increase in property there. They did acquire new acquisitions this quarter. Some of them might have not closed, but some of those acquisitions assets do get moved on to Microsoft as well. So overall, total assets increased by about $14 billion. Next, let's take a look at total liabilities. The last thing we want to see is total liabilities also increase by that amount of money. Even right now, we want to see total assets increase at a faster rate numerically wise than total liabilities. So total liabilities right now is sitting at $183 billion compared to $184 billion same time last year. So they're actually paying down their debt, which is pretty good. Most of it long-term debt. Last year they had $66 billion. Right now they have $59 billion. So it's showing me I am liking Microsoft's asset balance distribution, especially since this company almost has a 1-to-1 ratio of total cash and cash equivalent to total liabilities. they can pretty much pay off their total long-term debt and still have over $70 billion in cash. So I do like that Microsoft is using that cash right now to acquire more businesses. So now let me just give my thoughts on Microsoft. So Microsoft, I personally believe it's in a market that's gonna continue to grow. I do believe the clouding market is one that's gonna take Microsoft into new levels as long as this growth continues to happen. 50% year over year is still amazing, and due to the tailwinds of the clouding market, I do believe even the upcoming quarters will show similar results. Microsoft again is a huge enterprise monster where most of their software are being used by all the top S&P 500 companies, from Microsoft Office to Outlook. One thing though is I do believe sometimes Microsoft might not be managing some of their products so well. For example, the gaming platform Mixer. Mixer could have been a huge potential growth for Microsoft, but they kind of just let it slide. They have had similar stuff with other platforms as well, and I just hope that they start managing their products a little bit better because they are in the right markets. Skype, for example, Skype could have been Zoom came in to fill in the spot where Skype wasn't, but Skype was already in all these computers. So why did Microsoft lose the ball there? Again, I do believe it might be some part of bad management in some form of aspect. So I do believe there is improvements that Microsoft can do. But at the end of the day, Microsoft, I believe, is one that's gonna be such a winner in this market. But right now, I personally already have a decent sized position on Microsoft. And when I mean decent sized position, I think it's closer to 4 or 5% of my portfolio. I don't know if you guys have not been watching my channels. I have a very diversified portfolio of about 47 companies in my portfolio, most of them being below 5% equity. But even with this type of portfolio, I am destroying the market right now in form of rate of returns, which I am happy. And like I said, there's always so many ways one can make money in the market. There's no right way, and I just enjoy the way to invest. So Microsoft for right now, I'm not buying into it because I have a position in it. But if I didn't have a position in it, I would enter slowly and surely just to build up a position over time and dollar cost average my position. So I hope you guys enjoyed today's episode. Like always, have a good night. Make sure to hit the thumbs up. Take care and see you next time.